Welcome back to Market on Close. Let's talk about the big down mover of the day. It's crude oil sticking out like a sore thumb in green stock land. Scott Bauer is joining the CEO of Prosper Trading Academy. Scott, how do you even want to? Do you want to? I mean, crude is just a total train wreck right now. And that's as we're a buck off the lows. We're still down 6%. This morning it was looking like zero as maybe the next level of support.
It's unbelievable, and pretty soon the U.S. is going to, start looking for places to start stockpiling this. Oliver, they may call you and, try and get one of your storage units or something. This is just unbelievable. However,
they're digging in the wrong place.
I do want to do something in here because I'm a trader, and I want to do something. Not that I really have an opinion, a longer-term opinion here, but given the volatility that we're seeing here, there is lots of opportunity to trade this. And I'm not looking at this as an investment. I am looking at this as a trade.
All right. So walk me through it, Scott. You want to try and bet on just volatility in general? Do you want to pick a direction?
Well, here's what I'm going to do. I'm going to construct a trade here based off of the May futures that gives me a break even in crude down to about 13 bucks. Okay? So
okay.
If I buy one of the 17.5 puts, sell 3 of the 15 puts, and buy a 14 put. And now this is all going out to May expiration. Okay. I can do that and collect somewhere between 60 and 65 cents. Okay. It is different than just selling a naked put to the downside. The difference is, again, my break even here at expiration is about $13. But if crude continues to slide down here, because I'm long this 17.5 strike put, I can actually make more money on this. With my break even down at 13, though, I'm willing to own crude down at 13 bucks. That's why I love this trade.
Okay, so basically, one, you're saying crude, if it gets down to $13, is preposterous and basically give you as much as you can get. Maybe I'm, speaking for you a little bit there, Scott, but the idea is you own it. You get long crude if it goes down that far.
Yeah.
In the meantime, you can make some money down to a point, and you still have a pretty wide range within that point. What happens if crude rips higher then?
So if crude goes higher, great. I keep the credit that I did on this put spread. So I'm selling this. I'm selling this combination of put options in collecting 60 to 65 cents. So if it goes higher, I don't benefit on the move up other than I get to keep all my credit.
Got it. All right. So the 15 strikes, using all the same expiry, by the way, May 20th.
Yep.
The 15 strikes, you're selling 3. You buy the 14 lower, and you buy the 17.5 one. So if you want to put on even more from this, then obviously you could just keep that same ratio for each one. Curious, Scott, on the expiry, why a single expiry? Why not like a diagonal element to it to give crude more time? Is the idea that May is just a solid enough time frame to get some resolution to the short-term vol?
Exactly. That's exactly right. Because there's so much that can happen between now and May. We don't know, once the OPEC restrictions really come off, what's going to happen? Are they going to go back to the bargaining table at some point? So I'm giving it some time. Plus, going out that little bit of extra time allows me to collect a little extra credit right up front now.
Yeah. All right, so taking the credit now, watch the thing go wild. I'm curious on the energy front overall for stocks. You're trading the commodity here, Scott. Is this something that you're restricting to the commodity? Do you want to dabble in any of the companies? Dallas Fed just was totally smoked today, just fell apart into pieces. Obviously, a lot of oil happening in Texas. Any thoughts on how you want to play the energy sector for stocks, or are you steering clear?
No, again, I'm doing some similar strategies in some individual stocks also, where I'm really trying to pick and choose the massive amount of premiums that are out there. I am absolutely not trying to pick bottoms in any of these stocks, but what I'm looking to do is come up with some of these types of positions that give me about another 25% room to the downside. So if the stock does go down that much, I'm still protected. And if it goes up, okay, I keep my credits.
All right. I like it. Scott Bauer. Good. Take care, sir. Appreciate the trade as always.
Thank you.
CEO, Prosper Trading Academy. Getting creative here on crude oil. Lots of red in the stocks. Worst performing group today. Lots of red in crude as well. Scott Bauer. Pretty interesting trade. Go back, rewind, and check it out and follow through the details. Scott always puts it on the Twitter as well, so go check it out at Prosper Trading Academy.